It's widely expected that the Bank of Canada will cut rates again at the next opportunity. How is it affecting the real estate market? We are joined by Toronto condo developer Barry Fenton, President and CEO of Lanterra Developments. Always great to see you.
Always a pleasure, Andy.
Just remind us the effect of interest rate cuts on, well, say your industry, the condo industry. I mean, it's good. It's good news, I guess.
It's a great psychological tool for home buyers and for investors. We've been talking about the reduction of interest rates for the last 2 or 3 years. So now that we're starting to see some reductions, it's fantastic news.
And people buy, potential buyers, they work it out on their spreadsheet or the back of an envelope, and they just think, well, I can afford more now.
Well, I think that's how they work. I mean, I've always had this thought and philosophy that most people that buy real estate, especially in our neck of the woods, which is the high-rise condo business, they buy it for long term. So whether an interest rate is at 8% or 5% or 3%, correct, it may affect their decision-making initially, but I think overall, that's just one component of how they decide to buy inventory or to buy a house.
Now, we got that study a couple of weeks ago that 80% of new condo investors who buy units to rent them out are underwater in terms of cash flow. Does that sound plausible to you?
No. You know, a lot of what you read today is because someone picks up on an article and they try to take the formula that they think works and they tell a story about it. I'm not saying that it is difficult now for some of the investors to be able to carry versus you know, what interest rates are and what the rental income is, but I can tell you a couple of things. Rental markets now have never been so strong. If you want to go out and commit to a 5-year closed mortgage today, it's not at 8%, even though prime is in the 6s. It's something like 4% or 4.5%. Granted, you know, a few years ago we were substantially lower.
Yeah.
But the most interesting part, which no one ever picks up on, is the fact that most people that are closing today on transactions bought these inventory units 4 years ago. 3 years ago, 5 years ago. So they're closing 3 to 4 to 5 years later. So when you think about it, okay, so there may be some pain now in the sense that there's a shortfall on how to carry it, but they bought inventory, let's say a 2-bedroom apartment back 4 years ago at $600,000 for the total value. Today it's trading at $750,000. So they don't write that down in the article to say that anyone that bought stuff 4 years ago is way ahead to where they are today.
But if your cash flow is negative, it could be hard to carry indefinitely.
Well, I see I read the article and they were saying there's like $7,000 of shortfall. But when someone looks, you know, in the back seat and sees that they're up $150,000 on an investment in 4 years, they try and figure it out. And I don't think that affects anyone's decision today, to be honest.
John Pasalis of Realosophy Realty told us a while ago that pre-construction sales are falling off a cliff. Is that overstating it?
I'm going to say they have fallen off a cliff, but you know, we have there isn't any much going on right now, and you know, again, my theme for today is if you look at what the correction has been in our business, the high-rise condo business, you're probably looking at a 3 to 5% correction in actual prices over the last 2 years. Not bad.
Not too bad.
Not too bad. But I think overall, the pre-construction business will for sure pick up over the next couple of years. And then again, I go into this whole supply-demand issue, and I think that there's just going to be not enough supply for the demand.
I wonder, Will, is there any prospect of you guys, developers as a whole, getting a cut in these costs that municipalities impose on you? According to David Amborski, he's a prof at Toronto Metropolitan University, he says this has just been very punitive for developers, this ramp up in municipal charges.
I mean, they keep charging more every 6 months for development charges. I mean, I don't get it, actually, to be honest with you. I just don't understand how and why they decide to keep increasing. Because at the end of the day, someone like myself is going to look at the bottom number and say, I can't build something for X and sell it for Y. And part of that component is going to be the increases in development charges and other charge increases supplied by municipalities. So I think, you know, to sit here and try and go and explain to the officials that you need to reduce it, I think it's a hard task for them because they have to convince a lot of people. So we just have to wait for the market to chill out on that point. But I can tell you that construction costs in general over the last 6 months are coming down substantially. Good news. And again, I think that the supply-demand component continues to be a good theme. And I think that pricing, in my opinion, over the next 2 years will be 30, 40% higher from where we are now.
30?
Okay, let's say 30.
Okay.
And I've always been pretty good about suggesting where I think the market will be.
How have the costs come down? Just greater availability of labor? Or?
Well, it's not even so much the labor. It's the fact that there's a lot of big ramped up companies that rely on so much inventory being built a year.
Okay.
And we've been reduced now from building 20,000 units or 30 to like a couple thousand. So the trades themselves are sitting here saying, we need the business, we have a platform, we have people that we have to pay. So they're going to figure out a way to reduce the cost to someone like myself, who is the payer of the situation.
How long, once you start digging the hole, how long does it take to build one of your big towers?
I'm going to say minimum 4 years, could be 5 years, but it takes you some time to go to market. It takes you some time. Initially, it takes you some time to zone, takes you some time to go to market, and then it's probably a good 3.5 to 4 years. We're just completing projects now downtown that are 50-story buildings that have taken us a good 4 to 4.5 years. And when I built out Maple Leaf Square and basically the main quadrant next to the Air Canada Centre, in those days, even with the trades that we had, it was maybe a 3.5-year build as opposed to 4.5 today.
Right. And so that's the physical building can take 3 or 4 years?
That's correct, yeah.
I guess
it
they're big units, yeah.
Well,
yeah.
There's a lot of floors. You're not building, in the old days you were building 30-story buildings. Today people are trying to get zoned at 90, even though 90 stories or 80. But I mean, I wouldn't be building that type of product anyways.
Why wouldn't?
Because there's really cost. It's very more costly once you get to a certain level, in order to achieve to get from, for example, 60 floors to 80 or 90 floors. Just costs increase substantially because of the height.
I can imagine the elevators, the plumbing,
everything.
Yeah. What about the size of the units? Now, apparently, the Globe says Ontario condos have shrunk by 35% in 25 years. And we got these pretty small units of 700 square feet, and apparently some consumers are pushing back. Are they going to get bigger?
I'm not sure if they're going to get better. I mean, the whole discussion is, do people want to move from their houses to now something that's 2 bedrooms or 3 bedrooms? But when you think about what we offer now for downtown product and all of the great amenities that we offer down on the main floor or wherever the amenities are and everything surrounding the buildings, people can for sure live in 600 to 700 square feet. In fact, we were looking at designing a project now where we're going to be something like 350 square feet per unit.
Wow, 350,
so
that's tight.
You still get a kitchen and a bathroom and enough room for a queen bed. No, but I'm saying that there's the whole thinking of needing to buy bigger in order to feel comfortable where you're living. That philosophy has been thrown out the window.
That's interesting, yeah. Although I saw a study today, I think it was Princeton University, saying that people in the USA, I think, are spending much more time at home these days.
Well,
we're cocooning, we're looking at our internet or something, I don't know.
Well, no, for sure. It's like when I go to New York and stay at a hotel, I'm comfortable staying in a 300 square foot hotel as opposed to 1,000 because I feel like I'm in a nice cocoon. So I'm cool living in 600 square feet at least twice a week.
Barry, thanks very much.